Hello, everyone. It's great to have you with us for our webinar today on the topic of elevating your firm, where we will be discussing key strategies in today's environment around efficiency, growth, and success. My name is Matt. I'll be your host for today's webinar. Before we get started today, let's quickly go through our housekeeping items. So today's event qualifies for 1 hour of CPE credit. To get credit, make sure to remain logged in for the duration of our time together. Respond to at least 3 of our poll questions. We'll announce those throughout the event. As long as you respond to at least 3 of those, you will qualify for CPE credit. If you do qualify for CPE credit, you can download that certificate from your Incorsa account, and that will be accessible starting 1 hour after our webinar wraps up today. If you have any follow-up questions on CPE, feel free to reach out to us at any time at support@incorsa.com. You can download a copy of today's presentation from that handout section in your pop-up GoToWebinar pane. We also attached it to your Incorsa account, so if you have any issues downloading it on the webinar today, you can download it from your account at any time. Our session today will be recorded. You'll have on-demand access to go back through that recording, and we'll post that recording to your account at some point this evening. As always, we would like our event today to be interactive, so as you have questions, feel free to submit those in that questions pane. We'll keep an eye on the questions throughout the event and try to address them towards the end of our time together. If we don't get back to you on your specific question during the event, someone will follow up offline. And feel free to head on out there right now to the questions box and let us know where you're joining from today, so we would be glad to give you a warm welcome. We're really excited to have PracticeERP with us today to present on today's topic. PracticeERP provides an all-in-one CPA firm management software that takes the hassle out of the day-to-day operations so you can focus on your energy where it matters most. PracticeERP is an all-inclusive platform that bundles CRM, client management, time and expense tracking, billing, and much more. Joining us today is Dirk Schimpau and Tim Moy. Dirk is a CPA, former controller and founding partner of Go Virtual Office with over 20 years in CRM, ERP, and accounting software experience. Tim is a CPA and managing partner with MBE CPAs. He has extensive experience working with a wide range of clients in many industries. So Dirk, Tim, thank you so much for joining us today. I will go ahead and turn the presentation over to you.
Great. Thanks, Matt. Thank you everybody for attending in your time. So my name is Dirk Schimpau. Like Matt said, I am a CPA, but I always tell everybody you don't want me to do your taxes. But my background is more around systems. My company, Go Virtual Office, we've been helping out businesses in all industries with that have outgrown QuickBooks, lots of spreadsheets, lots of different disparate systems. And that's kind of been my background, is helping out companies and controllers and CFOs with their systems. So, Tim?
Yeah, my name's Tim Moy. As Matt mentioned, I'm with MBE CPA, and our division is CPA 360. I will talk more about that. MBE CPA is a top 1% firm or a top 400 firm, part of the G400, and fairly involved in a lot of industry efforts. So glad to be here.
Thank you, Tim. All right, so we're going to kind of talk about how to elevate your firm. This presentation is, we've done it in the past. It's been up to about 3 hours. So we do have a lot of content to go through, and it feels like we're pushing through a little quickly. We probably are. There's a comedian here in our area called Charlie Barons, and he says, keep her moving, eh? So that's what we're going to do, try to keep her moving. But please submit your questions. We will get to questions at the end. We do have 3 or 4 surveys, and let's get started. So the agenda for today, we're going to be, we kind of went through introductions here. We're going to talk about today's challenges, people, process, systems, and then just this whole changing landscape. We also have a vision of, what do CPA firms do with these challenges? And it kind of is wrapped around these 4 capitals: brand, human, financial, and system capitals. And then we're kind of like, are you ready? Or here are some things to think about to be ready. And what does ready mean? Are you ready to grow? Are you ready to sell? Are you ready to sustain? These are all things that are, to think about as we're moving forward. So let's keep her moving. So today's challenges, right? We kind of put them into 4 main buckets. People, processes, systems, and there's this thing called changing landscape. And what do we do? What does a CPA firm do around these things? So people, Tim, what are some people challenges that your firm and you see other firms having?
Yeah, so I think the number one challenge in the industry is recruiting talent. I would say actually at our firm that is not too much of a challenge. We're all looking for more experienced staff, but we're able to find plenty of staff through some various channels that we use. But really our challenge is that we're developing systems around our accountability, especially on the remote employee, whether they're offshore or domestic, uh, how to train faster. So take 6 months of experience and boil it into three. We call it rapid training, rapid development. Um, Project and task flow management, we're making lots of headway there with PracticeERP. Just getting back to building culture and relationships with our people, and focusing on putting the right information in front of the right people at the right time through dashboarding, and then just really trying to increase engagement across the board with our people and our clients. So lots of exciting opportunities.
Yeah, and just like you, and this is what we've seen. Tim called most of it out, right? A draining talent pool. How to keep people productive, keeping them accountable. How do you monitor and see, are people, doing projects on time, within budget, of a good quality level. Culture is super important when we talk about retaining employees and everything else, and limiting turnover. So these are definitely some of the things we're seeing around the people aspect. Tim, do you want to talk about this a little bit?
Yeah, so this is something we're all aware of, but most of our workforce in our industry is baby boomer or advanced baby boomer, and so we're expecting 75% of our industry workforce to retire in the next 10 to 15 years. So we have to think about how do we replace that with artificial intelligence, how do we replace that with automation, and how do we replace that with attracting qualified people to our industry. Those are all challenges that are in front of us, and an opportunity for a high performing firm if they can execute on this turnover, if you will, turnover of the profession.
And I think you brought up I guess the 2 or 3 key terms, right? AI is super big. We're hearing it everywhere, not just in this industry, but everywhere. ChatGPT and everything else that everyone's talking about. How does that be brought into this particular industry? And then automation, regardless of specifically AI, but automating your billing and automating your task flow, automating the oversight, like automating time. These are all things that firms need to start to look to do, because if the talent pool continues to drain, we got to be more efficient with our day and the items and stuff we produce on a regular basis.
Yeah.
So process, Tim, what are some process challenges that you see today?
Yeah, so one of the things that we're focused on is it feels like too many people are touching a project. If you think about the cycle of a project from when it comes in the door to when it leaves the door, it gets delivered to the client. It feels like in our industry or in our firm, we have just too many people touching it. So we're working on that. But of course, we use the conflict to that is that we're trying to train. So one of the reasons in our firm we have a lot of people touching a project is because we're using it as a training tool. So it's how do we minimize the touches and maximize the training? They're a little bit conflicting. We're really trying to perfect project flow, project tracking, and project monitoring. We think we've got some good ideas there in dashboarding and scripted reports. Focusing on getting clients to deliver us the work when we want it versus when they want, so it's not just a random chance. It's actually a predictable thing. So focusing on getting the work in the door in a predictable manner, so that we can predict the workflow and the budgeting of the time. How to improve on artificial intelligence or process automation. In particular, our firm is focused on automating the admin process. We see that as a huge opportunity. There will be some opportunities for sure in automating the production process, but it seems to us like over the years, the production process has automated a lot more than the administrative process. So we believe there's lots of opportunity in administration. And then finally, just managing all the flying bullets. Everybody, every firm, every professional knows that there's, just lots of things going in lots of different directions all the time. But how do we bottle it and manage it? That's where our focus is.
Great, thank you, Tim. So, yeah, I mean, this is, you called it, right? Lots of inefficiency out there, duplicate work. Definitely see a lot of manual work that, things, there should be some opportunities to automate. And we have all these different systems, which we'll talk about. If we can find a way to integrate these different systems and have them talk to each other. And what does this do? This leads to lower utilization, lower realization, and lower profits. So again, when I see this, whenever you see a challenge, you also see the word opportunity. So let's continue on. So systems. Tim, talk to us today about systems and what your approach to systems are.
Yeah, so today our biggest thing is in July of 21, we adopted an ERP system. And we've all have clients in manufacturing or distribution that have adopted an ERP system. And to me, what an ERP system really is just this philosophy that we're going to connect everything. All of our systems are eventually going to be connected, and we're going to continuously improve on those systems through software modifications or enhancements. And so about 3 years ago, just under 3 years ago, our firm started the ERP journey, and it's, we've eliminated spreadsheets. We're not doing nearly as much data entry. Our reporting has improved. So it's just really been, and every day today as we work, we don't really think about, oh, now we're going to switch from one system to the other and go through another conversion. We're on our system, we're on our ERP. There won't be any more conversions. There'll just be enhancements to our ERP system. So to me, that's a really exciting thing, because we're going to spend our energy on improvement, not on conversion.
Yeah, the term I would call it's a journey. So yeah, and again, this is what we see. To be honest, in my background, right, our company historically works with a lot of distribution companies, manufacturing, e-commerce, software companies, professional services companies, and we see it all over. Definitely see it in the CPA space, where you have all of these different systems. Nothing talks to each other. Anytime you have these systems, you have multiple spreadsheets. People are dual entering stuff, poor reporting. All of this is just kind of, we see over and over again in lots of industries. And this is what an ERP can help solve is a lot of these things. So Tim, the world is changing, especially for CPAs and CPA firms. You want to talk towards this a little bit as well?
Yeah. So we all know, PE is, they are very present in our industry, and they are rapidly increasing the presence in their industry. If many of you haven't been contacted, you will be contacted as they build out their posts around the country. Again, I don't see PE as a bad alternative or a good alternative. It's just, it's for some firms and it's not for other firms. But whether you're working with PE or not working with PE, they're going to be a force. And I believe that the capital they'll bring to the industry will accelerate the AI and the automation adoption. So in some ways, it's very exciting. But there's going to be more pressure for our firms to perform financially for the benefit of our shareholders and our employees. And so, and again, I actually believe also for our clients. So we have to continuously get better. I do think the one constant in the world today is the pace of change is ever accelerating. So we just have to kind of get used to that and, move faster. And then again, the other massive change in the landscape is the amount of turnover that will be coming in the workforce as we prepare our industry and our firms for that. So these are all, the other thing I would say about these is these are all hard trends. Like there's no debate that these things are happening. And usually when you get into hard trends, they happen faster than people think they're going to happen. So, so they're going to happen. The only question is, how are we going to adjust and adapt?
And I will tell you, I'm working in this space now for the last 3 to 4 years, as well as other industries. I do see this space sometimes. Firms, leadership, they're kind of a little slower to change. I'm an accountant, so maybe I can talk about myself. We're all a little bit more conservative in this space, and in some ways, I feel like sometimes you gotta move forward. You gotta take some risks for the long-term good. You gotta be willing to have your cheese moved. All right, so we kind of went through the challenges. So what do we do? How do we future protect our firm? And again, whether you want to acquire, whether you want to be acquired, whether you want to sustain, how do you protect your firm? So we're going to go through some key things that we feel will help you protect your firm. So our vision, we basically have kind of 3 main things. We have this thing that we're going to talk about, the community, the power of a community, which we think is very valuable in this space. You guys probably may already belong to different communities where you share and have your trusted allies. We're going to talk about next gen technology, right? We talked about AI, talked about automation, right? Talked about a dwindling talent pool, workforce. So how do we replace that? The only way to really replace that is with technology. And then these capitals, which we'll talk about. So these are our 3 main things we'll be going through here. And then the first thing that we're going to talk about is the power of the community. So Tim, talk to me about community. What does community mean to you? What's the value of a community?
Yeah, so in a community, it's basically a group of people that have common beliefs and core values. So where this started for me was early in my career as a managing partner. I joined AICPA, PCPS, what's called Management of Accounting Practice Group. And this was basically 25 people that got together twice a year. And 15, 20 years ago, we'd get together in a hotel conference room, and we would talk about how to solve problems and how to improve our firms. And really, if I reflect back on our firm's growth, from 3 to almost 400 people today across our affiliates, it's really been centered around the fact that I've had this support of my community and my industry, and moreover, it's really that I've had the support of these 20 to 25 individual firms that honestly I talk to them every week by email or by chat or individual calls, and we're just supporting each other. And I really, that has transformed our firm and allowed our firm to thrive, even through the last, the challenging times of staffing crisis that happened for years, the 2008 recession, COVID. I mean, there's just been issue after issue with evolving. But because I've had this community of peers, it's made it a real, not that hard to do, because I've been able to share leading practices. I've been able to share metrics. We work together on solving problems. The one thing we haven't done that I'm pretty passionate about is that I think we can help each other with providing services to our clients, maybe outside the traditional CPA firm. So yeah, the community, the power of the community, when you combine it with the technology of the software, I think is an unbeatable combination. Today, they're basically separated. Most of the communities that exist are more chat rooms. They're really not powered by a common technology. So that's where I think we can really change the future.
Great, thank you, Tim. Yeah, and same thing. I'm in a couple different peer groups, and I find them super valuable. From what metrics, what's working, what's not working, so on and so forth. So just to do a little bit deeper dive on, right? Again, with your peers, with your trusted, group, easy, what's working, what market, how you getting leads, how you closing deals, what's the best steps to processing a tax return within your flow. How should we handle aged WIP? All of these things are different things that you could share within a group. Metrics, right? We see all of these different surveys that CPA firms fill out, whether it's the Rosenberg or others, and try to get on a common metric so we can scorecard each other. And if someone is doing really well versus someone else, I think, Tim, you have an analogy of golf, right? In this case, you want to talk about that a little bit?
Yeah, so I that's what I love about being in the community with my peers is, we're all running our race, we're all playing our golf game, but we play in groups such as a foursome. I am watching the other people swing, I'm watching how they approach, I'm watching how they, I'm talking to them about how they think through their game. And yet we're maybe drinking a beer together too and then having a little fun. So this whole thing can be fun when we're in the community and we're working with each other. And it can also be very rewarding, not only for the results we can produce, but the financial rewards that we can produce for our people, whether it's our clients, our employees, and our shareholders. So for me, it's just really exciting, and the opportunity that lies in front of us. And we do a lot of benchmarking. We'll talk a little bit about that here, but we probably participate in 5-6 surveys a year, because at the end of the day, the data, if you can aggregate the data and understand your firm, that gives you a nice basis for how to improve it.
Great. And then around this shared service offerings, Tim, you touched on this a little bit, right? I know MBE CPAs, you have some of different affiliates that offer different services, and that would maybe an opportunity for another firm to earn a commission, to make a referral. But the reverse is also, like, for the groups that's in this call or this webinar, you may have some unique offering that you could also offer other firms. So again, this concept of a community allows, and we'll talk about the concept of brand here with this as well. But Tim, any more to touch on with this?
Yeah, so Dirk's right. These are a lot of the affiliates that we have. Some of them are common, some of them are uncommon. We also have a business brokerage company that we use. We refer work to other firms because even as a firm of 300-400 people, you can't do it all. So we just referred an audit to a good friend of ours in Colorado. They'll do the audit for our client, and that allowed us to maintain our independence. I think in the future, we don't do hardware type technology today, so that would be something we could leverage another firm for. There's lots of things that we need help with too. So for me, it's just helping each other.
Yeah. So anyways, that's a kind of light setting the stage of community. We feel there's a strong value for this industry, particularly to have this community aspect. Our second thing is around technology, right? We talked about AI, we talked about automation, and this is our first survey question. How would you rate your current technology?
Thank you. And that poll has been launched. That should be up on everyone's screen. So our options here are adequate, needs improvement, poor, or strong. And we'll keep this poll open for about 30 seconds to collect our responses out there. Just a reminder, as we mentioned earlier, to respond to at least 3 out of our 4 poll questions to qualify for CPE credit today. We'll shut this poll down in about 5 seconds for anyone else who would like to respond out there. Thank you, everyone. This poll is now closed. Go ahead and share the results.
And this is kind of what we see. We do kind of see a mix of this, usually, and again, we see this in other industries as well, but this industry definitely has a lot of disparate systems. So I'm not surprised by the results of this poll. All right. So what is next gen, or this next flavor of technology that's coming or is already in some aspects there? What is it going to provide? that you may not have today. So one of the things we talk about is the right information to the right people at the right time. I think I actually have that on the next slide. So having real-time visibility to your data, and not having to wait for run some reports and have someone put in an Excel spreadsheet and getting it back 3, 5, 10 days, like on a dashboard, being able to see your data so you can make timely decisions. Increasing productivity, right? If things are more efficient, if things are connected, productivity will increase, which should lead to higher profits, better realization, better utilization. Control, right? So, having, and not control from a bad standpoint, but, being able to see, where things are working or not working, having that oversight, super important. Collaboration, right? One of the things you see with a lot of disparate systems is, assurance has their software, tax has theirs, the finance department is in QuickBooks, the salespeople are using something else, and it's really hard to collaborate because everyone's kind of in their own little world. So if you can get, this concept of an ERP, your collaboration will improve. And then workflow, the ways to automate workflow, automate emails of invoices or statements, or automate, what's on my workload today, and just to move things automatically. So, Tim, is there any quick points on this you'd like to touch on?
Yeah, I think what I would highlight is really the fact that our ERP system is only partially a software, and it's on a platform. And so for me, a software is developed by the software company. And so as users, we submit requests through the community to Go Virtual Office, and they develop PracticeERP. And they develop PracticeERP for everybody that's on PracticeERP. But because it is also a platform, if an individual firm wants to migrate it in a proprietary direction, they have the opportunity to do that. So that to me is a key to the right technology, is that we have left all of this software improvement or evolution in the hands of the software vendors. And this brings some of the ability to evolve the software in a proprietary manner to the individual firm. And I think that our solution is the only solution that's really offering that's available in the marketplace. So that to me is super exciting.
Great. All right. So again, dashboards, it's really important to see the right information at the right time, and to have role-based dashboards. And then this thing called automation, whether it's AI with ChatGPT, or eliminating keystrokes, eliminating tasks, focusing on, I always have the 80-20 rule, right? Only show me the exceptions. If all of the billing is within, if all the WIP is within some tolerance, just go create the invoice. Like, why do I have to look at everything, right? Or if the projects and jobs are within budget, I don't need to look at those. Just show me the ones that are, close to being out of budget, or so on and so forth. So, so a little bit about that. Okay. And then having a truly connected world, again, we see all of these different systems, and we wanted to kind of improve the experience from your clients, being able to see, trusted information from, within through a portal maybe, and then, to also improve utilization. Okay, so now we're going to dive into the capitals, and we have kind of 4 main capitals that we're going to do a deeper dive on. So we have what is called brand capital, human, financial, and systems capital. And it's really important for a CPA firm to be strong in all 4 of these, and we're going to do kind of a deeper dive into each of them. So Tim, brand capital. What is it, and why is it important?
Well, if we look at the 4 capitals, I think this has always been the one that our industry has kind of stood on top of. It's our reputation. It's not only our reputation with our customer base, but in the community, in the in the global markets and also with our employees. It's the reputation for being honest, being good people. That's the brand capital, and I think our industry has benefited from that for years. My reflection on the industry, though, is our industry hasn't leveraged that in an entrepreneurial way for our own benefit. And so I think that's something we've got to talk about as an industry going forward, and how we can, the reality is the marketplace trusts us. And so we should leverage that for good. Not only good for our shareholders, but good for our employees and good for our industry. And that's a great discussion that I like to have with other firms.
So again, I'll bring back up the community slide. One of the things we always, should be talked about is revenue unrelated to time, right? The CPA firm industry is work an hour, bill an hour, work an hour, bill an hour. One of the aspects of a community of leveraging your strong brand is to make a referral, and then get a commission on that referral. And again, that would be revenue unrelated to time. Regardless of where it is, all companies should be looking for opportunities to make revenue unrelated to time. And this is an example of that. Any other comments around this, Tim? Or?
Yeah, what we'll be doing long-term here is really creating like a marketplace for CPAs to work with other trust CPAs in the community that they know and trust and have relationships with. And again, we all know the scary part of making a referral is when it doesn't go well. But when you have a relationship with the person, a deep relationship with the person that you made the referral to, and it doesn't go well, then you kind of go over there as a neighbor would, and you help them improve. So we just see that as a huge opportunity going forward.
So that's a little bit about brand capital. We don't need to spend a whole bunch of time on that. Everyone has, for the most part, when we've done these surveys in the past, everyone's rates very strong on their brand capital. I always use the term know, like, and trust, and everybody in this space is very much known, liked, and trust. That's who you guys are and gals are. So, Tim, human capital, what is it and why is it important?
Yeah, so it's just the quantity of people that we have in our firms, the knowledge inside of those people, and the technical skills, and of course the people times the hours that they work times the knowledge and the technical skills is really what, to me, defines the human capital. It's our workforce.
So we'll jump into our second survey question here. And so what KPIs within your CPA firms do you watch the most?
Thank you. Poll question number 2 of 4 has been launched. That's up on your screen. Our options here are billable partner hours, ratio of staff to partners, realization, utilization. And I like this poll question because we always like to talk about what people should be looking at and what they actually do. And sometimes it's not always the same. We'll shut this poll down in about 5 seconds. Okay, thank you everyone in the audience. We'll share the results. So is this what people should be looking at?
Yep, we set this up perfectly. You may want to take a screenshot of these results, and I'll let Tim jump in here shortly, but we feel like firms should be doing exact opposite of more or less of what you're seeing here. But this is what we see all the time. Utilization first, realization, and then the other ones as well. So Tim, go ahead if you had.
Yeah, well, we all manage utilization because we manage it daily or weekly, right? We micromanage it. And quite frankly, it frustrates our staff that we do it, but we do it for, profitability and customer service reasons. And then of course we manage realization because we want to make sure that we're pricing the product appropriately. But we'll get into this and I'll show you why we believe this.
So we're gonna get into this in some detail for sure. We're gonna talk about, and I'm sure everybody on this call has heard the term leverage. This won't be a surprise, but we just try to bring a little bit more meat to this conversation as well. So, Tim, you want to talk about this slide a little bit?
Yeah, so this is one of the, like I said, about 6 surveys that we participate in. This is actually the 22 one, so it's a year old now, but the data hasn't changed. The data didn't change again this year. And what you'll see is it's not that fees per partner, which is a leverage statistic, and that ratio of staff to partner are the top two in this year. Actually, this is 2 years old, but again, the stats didn't change. In this one, and then also, I would argue that number 4, partner billing rate, is also a leverage statistic, because the higher your partner billing rate, the more incentivized your partners are to push the work down, which then creates leverage. So how I look at this is, 3 of the top 4 are leverage correlated statistics. And what we're doing in this chart is we're saying which KPIs most tightly correlate to net income per partner. And you can see, even if you go down to number 4, from there, the drop is over 100,000, from 812,000 to 691,000. So there's a much less correlation when we get down to 5 and below. And you can see realization in one of these years was 5, and in the other year it was 7, and previous to that, utilization was 5 and 7. So utilization and realization are important, but they're not in the top 4. And the key thing here is that 3 of the top 4 are leverage correlated. And the thing I would point out is the observation below by the growth partnership that puts out the Rosenberg survey is every year we have done this, and they've been doing this for like 20 years, 24th edition, it says up at the top. So now 26 years. And every year the results of this analysis are exactly the same. So everything that the industry is putting out is telling us this, but yet we are not changing the habits of how we run our firm. And it's like we go to a seminar and we learn something, and then we go back to our firm and we just keep doing the same things. That's what our industry's been doing for years, and now it's time to change. And it's really exciting when we start thinking about this. And again, this chart is which KPIs most tightly correlate to net income per partner. So that should ring true with a lot of us. Thank you.
Yep. And again, Tim, just to keep this short, but you want to talk about this as well.
Yeah. This is just a second survey so that we didn't give too much reliance to one survey. Our firm participated in our RSM survey. And again, when you look at this, the ones with asterisks are what they deemed as leverage statistics. And you'll see on this one, they note that 4 of the top 5 are leverage. So again, they tried to think of the top 5 things that correlate to profitability of a partnership on a per partner basis, and 4 of the top 5 were leverage. Yep. So we all know, 6 through 10 matter, but they matter a lot less than 1 through 5.
So, Tim, what are some? I mean, obviously there must be a reason that leverage isn't measured more often, or it doesn't have the focus versus realization and utilization. What are your comments around that?
Well, I think it's a little bit the frequency at which we measure it typically. So it's kind of one of these things where energy goes, focus flows, or where focus goes, energy flows. So if we would measure it more frequently or on a different, like typically we measure it on an FTE basis or a large revenue basis. But I think if we could get to measuring it on an hourly basis, that would help us track it more often, put more focus to it, and think about what it means and get better at it, because we're paying more attention to improving it.
And what are some tactics? Like, if I want to improve my firm, what are some things I could do to improve leverage into my firm?
Yeah, so it starts with having the correct supply, right? We just got to have enough people to do the work so that we don't have the wrong people doing the work, people working below their pay grade. So partners got to do partner level work, managers got to do manager level work. In a lot of our firms, the core to that problem is we don't have enough production staff. So then we ask managers and partners to do non-manager and partner work. And so number one, we got to create enough supply at the bottom. Then the next step, of course, is to push the work down, because our our industry forever has, trained on the playing field versus trained in the classroom. So then we start pushing the work down and we do the training, and really not just training on doing the work, but then we have to evolve to training on how to communicate with clients, and internal communications are a big opportunity for improvement. And then also get back to relationship building, because relationship building is different today with all the technology that was afforded to us. If we think back 10 or 15 years ago, how we would build a relationship with a client is a lot different than today, but we still have the opportunity to do it. We just have to think about how to do it in an automated fashion. And then we'll have time to do it in a little bit of the old-fashioned way if we like to. I still like going to lunch with a referral source or with a great client. But if I do everything else on the technical side in a faster manner and a more efficient manner, it frees up my time. And then how I choose to spend my time is my choice. And finally, at our firm, we use what we call and one. So at every stage, we are trying to basically double the staff so that we can show somebody else how to do it, including the interview room if we do an interview, including on an email to a client or a communication to a client. We're just trying to double the effort so that we can teach the younger people or the less experienced people how to leverage it down. And really, once we do that, the other thing we're doing is documentation. And as we think about the documentation, once we can document, then we can automate. So that really is the exciting piece where we get into the technology. So I do think there's a layer of leverage that's even more profitable than pushing the work down. It's the automation.
Yep. The other thing I would call out, I know we're specifically doing in PracticeERP, is we actually have leverage measurements where we look back at the last rolling 12 months, and we can graph that out so we can see trends, hopefully going in the right direction by partner, by manager, because leverage is not just at the partner level, it's also at the manager level. The other thing is we have things like difficulty of work on a project, right? 1 being easy, 4 being hard. And last year I did level 2. This year I should probably do level 3, right? I should be doing harder work, and I want to sort my workload based upon difficulty of work. So anyways, we can spend a couple hours on this topic, but I'll just move ahead unless you got a quick comment, Tim.
Just the only thing is I really believe leverage should be measured against yourself, not against the people in your firm, because everybody's running a different race. Everybody's got a little different nuance of duties. So I don't want to compare Aaron to Jennifer. I want to compare Aaron over time to Aaron. And now he can go, again, back to our golf analogy, he can go peek at what Jennifer's doing, but really let's just focus on Aaron getting better every day on leverage.
All right. So some other aspects of human capital, right, are happier employees. This younger generation definitely wants to work with newer software. They're on their phones all the time. They're used to the latest widgets and gadgets. So giving the younger staff, a fresher look, a web-based, a cloud-based application, definitely we've seen help in retention and everything else. Being cloud is cool. Everyone likes cloud. It's easy to spin up another office or work from home or a coffee shop, and automate. We already talked about automation quite a bit. Another thing is reducing stress, right? As a producer, as a staff accountant or a manager or partner, right? We don't want to let clients down. We don't want to let team down. I want to do the right work at the right time. I want to make sure, I'm, within budget, on time. And it'd be nice for me to just manage my own workload without someone specifically telling me what I have to do when. So providing, a professional the ability to see their workload and to organize their work according to, because we all work differently. So again, take the micromanagement out and let an end user or producer, make sure they're measuring themselves, according to a dashboard and according to a goal. Time. So this profession, like other professional services, time is something that we've all had to do. We all have to do. Tim, you want to touch quickly on time entry and your approach today on time entry versus what it used to be?
So what we used to do before we went on to the ERP system, we would track our project in one system and we would track our time in another system. And today what we do is when we open a project, to understand the details of the project, we simply click on start timer. And then when we go to move the project to the next stage, the system intuitively knows most likely what's the next stage, who's the next person at that stage that it should get assigned to. And again, I can edit that. And the system also intuitively knows all the details of the timesheet. So the client, the project, the work code description, the duration of time, all of that is auto-populated. And more the system gets it exactly right because I'm using the system to keep my timers. And so as the system gets it right, I just simply hit accept. I don't have any data entry for timesheets, zero, unless I want to edit it. And it prompts me to see if I want to edit it, and I make that edit. And I only edit the things I want to edit instead of populating all of the items. And of course, if I want to, I always have the option to delete the timesheet. But because we've done that, I believe we've cut the time to keep time by 75%. And that's not only increased our productivity, but it's greatly enhanced our culture because our people are not feeling like they're being micromanaged to the timesheet by the minute.
Yep. So again, there's all sorts of things that we're trying to do and have done and will continue to do to streamline time entry because no one really likes to do time. But we're all professionals. Again, when we talk about, go ahead.
If I could just add, the one thing that I would say is that we don't want to go to an environment where we've eliminated the timesheet, because if we eliminated the timesheet, we greatly reduce our ability to analyze the data of the efficiency of the project, the client, or the employee. So let's automate the timesheet.
Yep. Thank you, Tim. All right, so we're down to about 10 minutes here, so we'll just keep her moving. As I said, financial capital. Tim, what is it and why is it important?
Well, so the key for it's the profitability at which we reinvest in the firm, right? And so most professional service firms distribute most of their profits to their partners. What we have to figure out as an industry is how to grow our profits and then stable, but without hurting our take-home pay of the owner group. But I can see in the past, CPA firms primarily invested in, building AR, buying technology, and conversion of software, and buying just enough people to survive. We have to put more capital to automation and artificial intelligence.
Yep. Basically, invest in your firm. We're going to talk a little bit about some metrics. We're going to get a little deeper dive here in some metrics, and the importance to invest in your firm. So these are some of the top profitability metrics that we kind of called out before. Leverage, we already talked about. Revenue unrelated to time, two big key things to help out. And then where we start to get into revenue and margins, which partners are most profitable, which lines of businesses or niches within your company are more profitable. Maybe we got to invest more in those versus ones that were least profitable. Looking at rates, utilization is still very important, right? How are employees and team members doing against goal? And realization, are there a lot of write-offs? What is the reason for the write-offs? Maybe run some reporting on adjustment reasons. What can we do to increase our realization and our write-ups and so on and so forth? And we need to look at trends around all of this. How are we trending, good or bad, month by month, year by year, so on and so forth. So again, it's important to have a system that can support this various analytics and views. Utilization. So Tim, what are some tactics to improve utilization? It is still important.
Yeah, so we not only manage the employees to their weekly budget goals, and really every employee's got their own dashboard. So they can see on a daily basis, on a weekly basis, live if they're hitting their budget. And so it's kind of like a car tells you to put your seatbelt on. If that information is readily available to you constantly, you just perform to the budget. So we're actually giving them more information faster, but now because a human's not delivering it, they don't take it so personally. And then we're pushing the work down. We're also managing project by budget. So that's a key metric when you start thinking about, an employee picks up a staff and they know how much time has been allocated for them to produce that work. They start performing to that metric, where most firms, maybe they would budget the larger projects, but they don't budget all the projects. Today, we budget basically every task in our system or every project in our system. So.
Great. And then realization, Tim, what are some tactics to improve realization?
Again, the project management and the budget so that staff doesn't go over, dashboards so that the right people have the right information at the right time. And really, again, because it's an ERP system, everybody gets to customize their dashboard. So that's a huge advantage because what might be important to one person might not be important to the other one. We also do a lot of what we call after action reviews. So post a project, or post a season, we sit down and say, okay, how could that have been better? And we do it right at the right time. And then from there, we evolve. And then we also grade all of our clients. So you could see where Dirk was showing before that there was a client grading. So we spend our heavier focus on the A clients and the B clients and a lesser focus on the D and E clients. And then we train every day so that we get faster at the right people doing the right work.
Great. Thank you, Tim. So those are some profitability metrics. Let's talk about cash, right? Cash is super important. The ability to monitor your aged WIP or your aged AR, having all this stuff sit on your balance sheet and having all this cash that's not in hand, it's a big deal. So, and then, we talked about distributions, right? Invest in your firm. And again, we want to look at trends. How is our AR trending by partner? How's the age WIP trending by partner, by manager? So it's important to see all of this very easily from a dashboard. So again, WIP, you guys all work with WIP. It's a depreciating asset. The longer it sits out there, the longer it doesn't get billed, the less likely it is you're going to be able to bill for it and collect for it. And we provide the ability to, either by partner, by manager, you could see who's got the most aged WIP or aged AR. So a managing partner can, basically make a nudge and say, hey, let's get some billings in. Or you could set up some rules and different things. And we definitely have some automation around billing as well that's available. Another thing is around AR, right? Past due AR, overdue AR. We provide a banner right across at the project. So if a client has overdue balance, maybe we shouldn't be doing the work, or maybe have a firm policy. So these are things that we have the ability to get cash sooner, right? Click to pay from an invoice or statement via ACH or credit card. All sorts of different tactics to improve cash. And again, different dashboards on trends and so on around AR, so on and so forth. All right, so this is our third question here. We're down to about 5 minutes left, but how would you rate your reporting capabilities?
Thank you. That poll has been launched. So our options here are adequate, needs improvement, poor, or strong. In the interest of time, we will shut this poll down quickly. Please make sure to input your responses as soon as possible. Okay, we'll shut this down in about 5 seconds. Thank you, everyone. This poll is now closed, and looks like about half say adequate. The rest say at least needs some improvement.
Yep, and that's kind of what we kind of see is about a 50% of the firms or so definitely could use improvement. again, long term, the idea would be to have everything on a dashboard that's real time. You know, to be able to filter and group, you know, look at real time data, look at trends, you know, benchmark and scorecard. These are all, you know, very important, you know, utilities to have at hand when managing a firm. So this is our last capital, and we're getting kind of close to the end here, but we only have 4 minutes left. So Tim, what is system capital and why is it important?
Yeah, so it's everything from our tech stack to evolving our tech stack to the processes at which we use. And so for me, this is technology combined with AI, combined with system automation and system processes. And it's all of that together where it's not just tech, it's tech plus the processes. And then how can we bring AI and automation into those?
So here's some stats about, you know, the importance of having a good tech stack, of having good technology, you know, from some key players out there. This is what we do see today in this space, right? We see all these different systems. Nothing really talks to each other without, you know, hand keying back and forth. We kind of refer to this as the hairball. Basically, anytime you have this environment, you have lots of spreadsheets to support this as well. You know, so again, we're talking about people, process, and systems. You know, ideally, you would have all of this within one system. And then, you know, we already went through this slide, the benefits of having new tech or, you know, technology. So this is the final 3 or 4 slides. You know, are you ready? And when we talk about are you ready, I've already said this, like, is your firm ready to sell? Or are you ready to acquire? Or do you want to sustain, right? All 3 are fine. We're not really saying you need to do one or another. You need to have, you know, these capitals, these 4 main capitals. And again, we would ask typically, you know, which of these capitals is your strongest and which is your weakest. I will tell you what we normally see is brand is super strong and system capital is the weakest in this scenario with other firms we've talked to. So I guess this is our last and final poll question.
Yeah, thank you. This 4th and final poll has been launched. It's up on your screen. So when do you plan on updating your operation and administrative technology? We'll keep this open for about 30 seconds to collect your responses on this last poll. Okay, the responses are coming in good. Thank you for your quick responses. We'll shut this down in about 5 seconds. Okay, thank you. We'll share the results real quick and we'll move on.
And that's normally what we see is, you know, and this is you know, a big decision. You know, I wouldn't expect any firm to make a decision in the next couple of months. It usually is a plan, a 1 to 3 year plan. So that was kind of where most things kind of showed up here. So that would be our recommendation. So this is kind of where we talk about the community. We went through that. The solution, right? It would be PracticeERP and then endless insights. So Tim, one final closing thoughts on the community?
Yeah, so we're building the community. We call it CPA 360, which again, it's more than just a peer group where we're talking about our opportunities and our issues. It's we're really getting together, and we're getting together at all levels of the firm, not just the partner group or not just the firm administrators. Every level of the firm is meeting with other firms and talking about how we can increase the management and administration of our firms. So to me, it's like the former MAP group that I described on steroids, because we're using a common tech stack for the central administration of the firm.
Great, thank you, Tim. And then as far as the platform or the technology, you know, PracticeERP, we showed you a few screenshots. We've kind of talked conceptually. If you're ever interested in learning more, please reach out to us. We'd love to talk with you as well. And we just feel like the combination of the community plus the technology is a platform for continued success. And Tim, why don't you have the closing talk.
Just come give us a call, reach out to us when you're ready to start the evolution. We believe we can make it a lot easier and a lot less painful, as so much of the product development's already been done. And again, the key is if you want to develop your own platform, you still have some ability to go and be proprietary and have an impact on the software and the community. So just let us know when you're ready to start evolution.
All right, so I apologize. We don't have a lot of time for questions, and then we can get answers offline as well. So Matt, I'll let you take it.
Yeah, thank you so much, Tim and Dirk, for a great presentation and for your insight today.